Have you ever looked at someone earning $100,000 a year and assumed they must be financially comfortable? A nice apartment, a decent car, weekend dinners out, maybe one vacation every year. From the outside, it looks like the kind of income that should solve money stress. And yet, many people at this level quietly feel the exact opposite. They're not poor, they're not irresponsible, but somehow, by the end of every month, there's almost nothing left. That uncomfortable gap between income and reality is becoming surprisingly common across the United States and Europe. Because earning more money does not automatically create wealth. Sometimes it just creates a more expensive version of being broke. Take a realistic example. Imagine someone living in Chicago, Manchester, Berlin, or Amsterdam, earning around $100,000 a year, or the local equivalent. On paper, this sounds strong, but after taxes, healthcare contributions, pension deductions, and insurance, that number changes quickly. In many parts of the U.S., take-home pay might land somewhere around $6,200 per month. In parts of Western Europe, depending on the country, it may be slightly lower because of higher taxes, often balanced by better public services. Now look at where that money actually goes. Rent or mortgage in a decent area, $2,000. Car payment or financing, $550. Insurance, fuel, maintenance, and parking, another $300. Student loan payments, $400. Phone, subscriptions, internet, and software tools, $200. Groceries and food delivery, $600. A few dinners, social events, birthdays, weddings, office outings, $400. Credit card minimums from past travel, furniture, or electronics, $350. Gym membership, streaming services, shopping apps, convenience spending, $250. Without anything extreme, the total is already close to $5,050. Now add irregular but normal life costs, a dentist appointment, a car repair, a friend's bachelor trip, holiday gifts, a flight home, a rising utility bill in winter. Suddenly, the remaining margin disappears. This is where the confusion begins, because the person is objectively earning well. So why does it still feel like financial pressure never leaves? The hidden mistake usually isn't one dramatic bad decision. It's the silent expansion of lifestyle that happens as income rises. Every upgrade feels reasonable on its own. A safer neighborhood because work is stressful, a newer car because reliability matters, a better phone because it's used every day, better clothes because appearance affects confidence, a few premium subscriptions because convenience saves time. Each decision makes sense in isolation, but together they create a life structure where almost every dollar already has a job before it ever arrives. This is the real system flaw most people miss. The modern middle-class lifestyle is designed around monthly affordability, not total financial impact. People don't evaluate the full cost. They evaluate whether the payment fits into this month. A $550 car payment doesn't feel like a $33,000 decision. It feels like something manageable. But stretch that over 5 years, add insurance and interest, and the true cost can quietly exceed $40,000. The same thing happens with furniture financing, phone upgrades, buy now, pay later plans, and revolving credit card balances. The brain compresses long-term costs into harmless monthly numbers, and psychologically, that changes behavior. This is where money becomes less about math and more about identity. At $100K, many people unconsciously feel pressure to look like someone who earns 6 figures. Not luxury, just competence. The right apartment, the right social life, the right clothes, the right vacations, the right car in the office parking lot. None of this feels like showing off. It feels like keeping pace with the environment. That's why even intelligent people fall into the trap. They're not chasing status in the obvious sense. They're trying to reduce social friction, to avoid feeling behind, to feel like their hard work is visible in their lifestyle. But wealth rarely looks emotionally satisfying in the short term. Real wealth often looks boring. A paid-off used car instead of a financed new one, living slightly below what peers considered normal,
saying no to upgrades that technically fit the budget, leaving room in the month for uncertainty. That single shift changes almost everything. A financially intelligent person may still rent a great apartment, they may still travel, they may still enjoy good things, but they understand that recurring expenses are not just lifestyle choices, they are claims on future freedom. Every monthly commitment competes with investing. Every financed convenience delays ownership of productive assets. Every status purchase trades long-term optionality for short-term emotional relief. And once you start seeing money this way, the feeling of being broke at 100K begins to make sense. The issue is rarely low income. It's that modern professional life quietly teaches people to convert raises into obligations. The raise comes in, the apartment gets upgraded, the car gets newer, the weekends become more expensive. The baseline moves, and soon the person is earning far more than they did 5 years ago, while feeling almost exactly the same financially. Not because they failed, but because lifestyle inflation happened invisibly. That's the uncomfortable truth. A six-figure salary can absolutely create wealth, but only if income growth outpaces identity-driven spending. Otherwise, more money simply funds a more sophisticated version of financial stress. And for many middle-class professionals in the US and Europe, that's exactly what's happening. Not a money shortage, a margin shortage. And margin is what eventually becomes freedom. If this changed the way you think about income and lifestyle, consider subscribing for more calm, reality-based finance psychology.